Straight to the top story this evening. The second quarter GDP numbers were released earlier today. The Indian economy grew by 5.4%, the slowest pace in 7 quarters. Lata Venkatesh is here to break down the numbers for you. Lata, over to you.
This is a seriously disappointing number at 5.4%. Of the poll I did, even the lowest number was only 6.3%. And of course, the average I got was 6.5%. The Reserve Bank was standing at 7% as recently as October first week, and later brought it down to 6.8% expectation. So 5.4 was in nobody's gaze. The culprit appears to be manufacturing and mining. We did get that whiff when the second quarter corporate results came in. All the metal, mining, oil and gas companies, everybody dependent on this commodity segment, reported negative EBITDA. So we should have realized that these two would have disappointed. So that number, manufacturing, the average I got in the poll was 4.7. It is coming at 2.2%. Mining is minus 0.1%. So those are the ones that have dragged the output down. The other disappointment is financial sector. You know, that category includes finance, insurance and real estate. Real estate had not done so badly, but nevertheless, we have just got a 6.7% growth. The expectation was that finance would be somewhere at 8%. That also has been a disappointment. But if you looked at GDP, not from the output side, but from the expenditure side, did you spend it on consumption, on investment, on imports and exports? Then the disappointment is on both investment and consumption. Consumption has grown at only 5.9 or maybe 6%. The expectation was that that would be a little better. But investment is the bigger disappointment. It's grown by only 5.4% for the last many quarters. Because of excellent government capex, the growth has been, between 7 and 11%. We even did, 11.6% year ago. So that is another big disappointment, that capex has not picked up neither from the states nor from the center, and private capex has not quite picked up the baton. So this is an all-round disappointment. What it could mean is that the government, the economy will not be able to churn out anywhere near the 7.4 that the Reserve Bank was expecting in the second half. Even 7% looks very difficult. And if it does less than 7%, then the full year will be even less than 6.5%. To get the full year at 6.5, you need at least 7% from the second half, which looks a tad too difficult. The question now, or rather the onus now falls on the Reserve Bank. Will they be able to deliver something in the monetary policy of December 6th? A rate cut will be tough because the last inflation number is above their inflation mandate of 2 to 6%. It came in at 6.2. But perhaps a CRR cut is possible so that more liquidity is released into the system. We will have to wait and see. But at the moment, I have to sign off by saying that this is a seriously disappointing number.
So disappointing number there. Thank you so much for that.